Are you watching the housing market as closely as most of us are? With so many questions about a housing bubble in 2021 and maybe a market crash, this is going to affect you. In this month's video, I'm going to go over job growth, homebuyer sentiments, current San Diego housing prices, and housing predictions for 2021. Additionally, make sure to check out these videos if you're thinking about buying or selling a home in San Diego. Hi, I'm Tristen Campanella with Home by Tristen, and we're located here in San Diego County, and we specialize in residential home sales and investments for real estate for all kinds of first-time home buyers, sellers, move-up buyers, move-up sellers, and veterans. I've lived here in San Diego for over 20 years, and real estate is my passion. I cannot thank you enough for watching this video. Listen, you guys, life happens at home, and that is why I am so passionate about educating people about real estate. I literally have seen it change people's lives. So you know the drill. Please subscribe and share this video with others who need advice from somebody who cares. So, back into it. May into June was a repeat of the last year. Homes are selling at breakneck speeds. In fact, I've personally seen offers that include that the home buyers will pay for the seller's car washes for a year, their Netflix for a year, and they even have offered to name their new dog after home sellers if the home buyers get the house. While I've seen this firsthand with over 20 plus offers on my listings in just hours in San Diego, I am also starting to see it slow down a little bit. This is mostly due to the home buyers' frustration with the housing market. According to Housing Wire experts, homebuyers are feeling pretty discouraged by the housing market these days. The latest Fannie Mae Home Purchase Sentiment Index shows that just 35% of consumers believe now is a good time to buy a home, which is down from 47% in April. And those who believe it is a bad time to be a homebuyer increased to 56% from 48%. So in case you don't know who Fannie Mae is, there is a good chance you've heard of Fannie Mae. But just in case you don't know what it does and how it operates, it is the Federal National Mortgage Association, typically known as Fannie Mae. This is a government-sponsored enterprise, and according to Doug Duncan, the Senior Vice President and Chief Economist at Fannie Mae, homebuyers are acutely aware of higher home prices and the very low supply of homes, which again are the two reasons most frequent that people are feeling discouraged. But good news for people, however, despite the challenging buying condition, consumers do appear more intent to purchase on their next move, a preference that may be supported by the expectation of continued low mortgage rates, as well as the elevated savings rates during the pandemic, which may have allowed for many people to save for a down payment. May data showed a healthy rebound in the labor market with 559,000 jobs added and the unemployment rate dipping under 6%. The hard-hit industries, including leisure and hospitality, education and healthcare and social assistance, saw the biggest gains. Let's talk foreclosures and delinquencies. Those are dropping. With the various foreclosure bans and mortgage forbearance options still available, this one's not a huge surprise. But both foreclosure filings and mortgage delinquencies have slipped. According to data, foreclosure filings dropped 1% from March to April and are now down 17% over the year. A mere 3,700 foreclosures commenced in April, a record low for that statistic. Simultaneously, mortgage delinquencies have dropped 7.11% month over month, and now fewer than 5% of mortgage loans are delinquent, and that is the first time the share has been that low since the pandemic started. What's more, serious delinquencies or loans at least 90 days past due dropped by 151,000 over the month too. Okay, let's talk housing affordability. Home prices have been on a tear for quite some time, and according to the latest data from the Federal Housing Finance Agency, there are no signs of this slowing down. The most recent house price index shows prices are up 12.2% over the year, and some places are up 20% in some of San Diego County. You can check out this video of should you buy a home in 2021 to see if you should. Sales are also suffering due to lumber prices remaining high. New home sales fell 5.9% nationwide last month. This is trending down from the first quarter, but it's significantly below expectations. Strong home sales early in the recovery have exhausted the inventory, and skyrocketing lumber prices have prevented a more robust resurgence in new construction activities. However, rates remain low and demand is only increasing as the economy begins to reopen. So, new home prices are growing by more than 20% on an annual basis, something to think about if you're thinking about buying a new home. What are the predictions for 2021? Well, looking at a slowdown in the mortgage applications, after 52 consecutive weeks of growth, we are starting to see slightly less competition for homes as more home buyers are waiting it out. This is good and bad. Good for those buyers who are sticking it out because they have a higher chance of having their offer accepted if they keep at it, but bad for home buyers who are waiting and they may miss out on the low rates if mortgage rates do go up. Sellers, you may see a decline in the amount of offers on your home and more realistic pricing may be coming soon. So instead of getting 50 or 100,000 over your asking, you may be receiving offers closer to the normal asking price. Watch and check out how to price your home in my playlist here. Okay, so guys, the biggest constraint on housing, again, is the supply. Inventory. Hopefully when we can start building more homes, we will be able to fix that. And now that people are getting vaccinated, I think we're up to 50% in California, that people are getting more comfortable listing their homes. This shortage, it serves as an opportunity for home builders to pick up incremental demand that we hope new home builders will soon fill. The underbuilding has left the low inventory of new and existing homes for sale at all-time lows, making the only solution to satisfy growing demand from the millennial population is to build more homes. So all signs are pointing to a surge of new building. Such a rebound, again, is highly reliant on lumber and supply chains. And as with the broad economy, the path of the coronavirus, if we build a couple new with the amount of people vaccinated in California who are now ready to list their homes, we should see some inventory opening up. Having a sustainable housing market growth of 3 to 5% is healthy. And yes, people are leaving California, and I'll be posting a video about that this month, but not in a way that is truly creating more homes for sale yet. Again, the bottom line is if new homes increase and people are more comfortable listing their homes, experts and current data suggest homeowners and prospective buyers might both come out winners. I expect a few more highs this year to come, and I also expect to see we're going to see some cooling this fall, perhaps getting us back to a more normal pace of growth. If you have any questions, I am here. My information to contact me is below. Please contact or leave me a comment. Links are in the descriptions, and make sure you guys check out my website for more housing statistics, and you can download your particular zip code in San Diego to find out how much equity you have gotten this year. Thanks again for watching, and make it a great day.